Hello and welcome to This Week in Bitcoin, brought to you by Relai Private. This week was very focused surrounding central bank news, and there's a lot that we need to cover today. We've seen this growing trend, especially over here in Europe, that central banks started cutting rates. The ECB and the Swiss National Bank were among the bigger banks who announced them. There were also some central banks in Northern Scandinavia who then said that they're going to follow this pursuit as well. And from the looks of it in Europe, the central banks have realized we're not getting fast enough to our 2% inflation goal. Thus far, the central bank in America, the Fed, did actually stick to their very aggressive plan with high rates and not cuts in the future. However, things changed this week when Jerome Powell announced in a press conference that he's expected to needing to cut rates because, at least in September and November, because he sees that they're not getting fast enough to their inflation goals. And normally, if rate cuts are to be expected and this is announced, this is a positive sentiment for all markets, from Bitcoin to actually traditional markets and assets such as stocks or bonds. However, this week, the markets didn't really react as anticipated with rate cuts. There are many theories for this. People may think that the rate cut had to come faster. That's why they react differently. But nevertheless, the actual goal of if they do cut rates, which means they increase liquidity in the system, inevitably, therefore they'll turn on the money printer, which has always been an indicator that then stocks soar and all of these assets actually enjoy a rally up, not because the performance is better of the companies itself, but rather because there is more liquidity in the system. However, this time around, that wasn't the case. With Bitcoin specifically, before the announcement, we actually crossed the 64K mark in US dollars. And since the announcement, there's sort of been a little bit of a destabilizing. It's also to be expected that a lot of people actually sold profits from their Bitcoin. Up until the point of the Fed rate announcement, you saw that BlackRock recorded new records within a month in their ETF inflows. All of the inflows were also there. And suddenly after that rate cut, people taking out their positions in Bitcoin. I don't think this was mainly done by Bitcoin investors who hodl real Bitcoin. This was more to be expected, probably with institutional adoption and certain companies, and possibly a few, let's call them paper hands, who sold their Bitcoin. Nevertheless, although we almost dropped back to 58K, so the 58K gag is still in play, Bitcoin started stabilizing again and sort of proving that it's not immune to Fed news, but you can see that there is a certain pushback against it. And if the money printer is coming back on, there is going to be a easier time because people will have liquidity and probably allocate into their assets they haven't done before. But it was a very interesting week to see that the Fed announcement did have some reaction in the markets, but not really as to be expected with every asset, Bitcoin included. And it remains to be seen if the trust in the central bank, in America especially, is maybe a bit broken, and that people start looking for alternatives. The best one, at least in our case with Relai, and I think you as a viewer will agree as well, is definitely Bitcoin. And from here on out, we will see how things will react. If there's going to be a phase again when the price will increase, that people will sell, and this will inevitably have an effect because the price then lowers a bit and higher a bit. And we sort of have this going up and down where people will inevitably find their footing in Bitcoin. Or if the rate cuts will be that massive, they expect 25 basis points in September, possibly October and even November, and then into next year, that the liquidity will be so huge that we will see what we've seen post-COVID lockdowns the first time in 2020 and have these huge rallies. No one of us has a crystal ball, so we don't know, but it's very interesting to see this week that the relationship between the Fed and generally speaking central banks and the market isn't as connected as we might have furiously guessed. And I don't want to make this video any longer. You know the drill. If you got questions, feedback, leave a comment below, and I look forward to seeing you next week again.